Hey guys, welcome back to the channel. I'm Luke, an ACA qualified accountant, and in today's video we're going to be discussing supplier statement reconciliations, and we're going to walk through a sample exam question which you may come across in the accounting fundamentals exam to show you exactly how to solve these kind of questions accurately and efficiently. So yeah, let's get into it. So let's walk through a supplier reconciliation scenario to see how we resolve differences between a business's internal records and an externally provided supplier statement document. So in this case, Thales believes it owes Yaros £15,800 according to its own payables ledger. But when Yaros sends over its own supplier statement document, it shows a balance of £17,700, which creates a discrepancy of £1,900. We're told that there are three errors which have contributed to this discrepancy. One, Thales returned goods worth £1,500 during the period, which it correctly recorded in its payables ledger, but Yaros failed to include these returns in their supplier statement. Second, Thales made a £700 cash payment to Yaros during the period, but mistakenly recorded it as £1,700 in its payables ledger. Yaros' statement reflects the correct amount. And third, Thales accidentally included a £600 invoice from another supplier, Yatton Limited, in Yaros' payables ledger account, incorrectly increasing the balance they owed to Yaros. So our task here is to assess how correcting each of these errors impacts the payables ledger balance, but also the supplier statement balance. And we need to correct Thales' payables ledger balance and check that everything reconciles after we've done all of that. So on the next slide, we'll determine the impact of correcting these errors on both the payables ledger balance and the supplier statement balance. And then on the slide after that, we'll correct the payables ledger and then reconcile that to the supplier statement balance. So cool, let's get started. So let's first evaluate the effect of each issue on both Thales' payables ledger balance and on the supplier statement balance produced by Yaros. So first let's look at the £1,500 return. Thales recorded this correctly, so there's no change needed in their payables ledger balance. But Yaros incorrectly omitted it, so the supplier statement balance needs to be reduced by £1,500 because goods were returned which cost £1,500, so that's going to reduce your supplier statement balance by that amount. Second, we need to look at the payment error. Thales recorded a payment to Yaros of £1,700 when it actually paid them only £700, meaning it's understated how much it still owes the supplier. So we need to increase the payables ledger account balance by £1,000 to correct the error, and there's no adjustment needed to the supplier statement balance because Yaros correctly recorded the transaction on their side. Third, the invoice from Yatton Limited. Thales wrongly attributed a £600 invoice to Yaros, so this mistake is going to artificially increase their payables balance. So we need to decrease the payables balance by £600, and again there's no change, no impact on the supplier statement balance. So that's all the adjustments we need to make to both documents. Let's now recalculate the correct balances for both records. So let's start with Thales' payables ledger balance. So we know that the original payables balance that they had recorded was £15,800. We don't need to make any adjustment for the returns issue, but we do need to increase that £15,800 amount by £1,000 for the second issue, the payment error, and we also need to reduce it by £600 for the wrongly attributed Yatton invoice. The returns error was a mistake made by Yaris in its supplier statement, so we don't need to make any adjustments to the payables ledger for the first issue. So, totaling up this column, we have a corrected payables ledger balance of £16,200. So that's our revised payables ledger balance. Now let's look at Yaris's supplier statement. So we were told in the question that the original balance was £17,700. We need to reduce that by £1,500 for the uncorrected goods return, but issues 2 and 3 were correctly reflected in the supplier statement, so we don't need to make any adjustments for the payment error or the Yatton invoice. So that brings us to a revised payables balance as per the supplier statement of £16,200 as well. So both sides now agree, both records now agree, so therefore our reconciliation is complete, ensuring that both the internal and external records reflect the same amount owed to the supplier. So that's supplier statements in a nutshell. That's how I would attack these kind of questions in the Accounting Fundamentals exam. Hopefully that video was helpful. If you've got any questions about supplier statements, bank statement reconciliations, I'd be more than happy to answer them. If you like the video, please smash the like button and consider subscribing. I'm more than happy to make more videos about this kind of topic in the future. Any questions, feel free to let me know, and I'll see you guys in the next one.